In 2004, a woman named Linda borrowed $300 to pay her electricity bill. She paid it back every single month for 2 years. By the time she was done, she had paid back over $1,800. And nobody had ever told her that was going to happen. Not the man behind the counter, not the form she signed, not the bright yellow sign in the window. Nobody. Sit with that for a second. She borrowed $300. She paid back $1,800. And at no point, not once, did anyone look her in the eye and tell her that's where she was headed. Now here's the question that should be making you uncomfortable right now. How does that happen to a person who did everything right? Us. That's what this story is really about. Birmingham, Alabama, January 2004. Cold. Not the romantic kind. Not the kind you see in Christmas movies with fireplaces and hot chocolate. The kind that gets inside the walls of an old building and stays there. The kind that makes a parent lie awake at 2 a.m. doing math in their head. Heat versus groceries. Late fee versus rent. Which problem do I solve first, and which one do I let bleed? Linda was 34 years old. She worked in the cafeteria of a public elementary school. Showed up before the kids arrived. Left after they did. Served lunch to 200 children every day. Made sure every tray was full. Made sure every kid got something warm. And took home less than $1,400 a month doing it. She had 2 children of her own. A daughter, 9. A son, 6. She was their everything. Their alarm clock, their homework helper, their cook, their safe place. She did it alone, and she did it without complaint, and she did it well. She rented a 2-bedroom apartment on Birmingham's east side. Old carpet, a radiator that clicked all night. But it was hers, and it was theirs, and she kept it clean, and she kept it warm, and she was proud of it. She kept a notepad, not an app, a physical spiral notepad where she tracked every dollar. Rent, bus pass, groceries, school supplies, her son's inhaler. She wasn't careless with money. She was meticulous. She had to be. When you earn $1,400 a month and you have 2 children, you don't get to be careless. Careless is a luxury that costs more than she made. But January had been brutal in the way that January sometimes is. The kind of month that finds every crack in a careful plan and pries it open. The heating bill came in twice what she'd budgeted. Then her son got sick. Nothing serious, just a chest cold. But the copay and the cough medicine and the 3 days she missed work to stay home with him, that carved a hole in the month she couldn't fill back in. And then the letter arrived from her landlord. Not a phone call, a letter, formal, 2 short paragraphs. The power to the unit would be disconnected within 10 days if the overdue balance was not resolved. 10 days. She called her sister. Her sister was in the middle of her own crisis. She thought about asking her supervisor, then didn't. She looked at her bank account one more time. The way you look at a broken thing, hoping it fixed itself. It hadn't. She needed $300. She needed it in days, and every door she knew how to knock on was already closed. She'd walked past the storefront 100 times. Same block as her laundromat. Bright yellow sign, big friendly letters. Cash in 15 minutes, no credit check, no hassle. You deserve a break. She'd always looked past it, had a quiet sense that it wasn't for her. That people who use places like that were in a different kind of trouble than she was in. She wasn't in trouble. She just needed $300 for a few weeks until her next paycheck cleared. That's the line, by the way. That's always the line. I'm not in trouble. I just need a little bridge. Asked. She walked in. The inside surprised her. It was clean, professional. Small waiting area, plastic chairs, a TV on the wall showing a morning talk show. The woman behind the counter had a warm smile and a name tag that said, Denise Such. Denise asked how she was doing. Didn't make her feel small. Didn't make her feel like she was somewhere she shouldn't be. The explanation was simple and clear and fast. You borrow $300. In 30 days, you pay back $345. That's it. $45 is the fee. $45 for a few weeks of keeping her kids warm and the lights on. She'd paid more than that in bank overdraft fees before. This was a solution. Immediate, simple, human. She filled out one form, showed her pay stub, her ID, a bank statement. No credit check, no judgment. Just paperwork and a nod, and $300 cash, counted out on the counter in front of her. She walked out of that store feeling something she hadn't felt in weeks. Relief. She thought she'd solved her problem. And she had, just not the way she thought. The first 2 weeks were normal. Lights on, heat working, kids warm in the morning. She packed their lunches, rode the bus to work, came home, made dinner, helped with homework, watched a little TV after the kids were in bed. Normal life. Ordinary, precious, irreplaceable normal life. She had a plan for the $345. She'd pull it from her next paycheck, tight, but she'd done tight before. She knew how to stretch a week of groceries. She knew every trick. But payday arrived, and the numbers did what numbers sometimes do. They didn't cooperate. Rent was due the same week. The bus pass had gone up. Her daughter's school shoes had worn through at the sole. Not want, need, the rubber was separating from the bottom. And the month, once again, had more costs than calendar. She was $60 short. She had $285. She owed $345. She went back to the store. Denise was there. Same smile. No problem at all, Denise said. We can roll it over. Just pay the $45 fee today. Push the $300 to next month. Your account stays in good standing. You've got another 30 days. It sounded reasonable. It sounded like a favor. It sounded like a company being flexible and human, because they understood that life was complicated, and sometimes people needed a little grace. Linda paid $45 cash. She walked out feeling okay. She'd handled it. What nobody told her, what Denise didn't say, what the form didn't say, what the yellow sign didn't say, was that this moment, right here, was not a solution. It was the entrance. Month 1, she rolled it over. $45. Month 2, same thing, another $45. She told herself she'd close it next month. She had a plan. Month 3, she tried to pay it off fully, came up short again, rolled it over. The plan moved to next month. Month 4, something quietly shifted inside her. She stopped strategizing about it. The $45 stopped feeling like a debt payment and started feeling like a bill. Just another line in the notepad, between the bus pass and the groceries. Something you paid because it existed, part of the rhythm of the month. This is the most dangerous moment in the whole story. Not when Linda borrowed the money, not when she first rolled it over. It's this moment. The moment the extraordinary becomes ordinary. The moment the trap stops feeling like a trap and starts feeling like furniture. Month 5. Her daughter looked up from her pasta at the kitchen table and asked, completely innocently, why they hadn't gone to Applebee's in a long time. Not accusingly, not with any understanding of what she was touching. Just a 9-year-old being honest the way only 9-year-olds can be, bypassing every wall a parent builds, walking straight to the thing that hurts. Linda said they'd been saving up. Her daughter said okay and went back to her pasta. Linda stared at the wall. She didn't cry at the table. She waited until the kids were asleep. By that point, month 5, she had paid $225 in fees. The original $300, not $1 had been touched. Every payment she'd made, every $45, every sacrifice, every month she'd chosen the loan over Applebee's, had gone directly into the company's account, not toward her debt, toward the cost of keeping her in the debt, toward the machine that was running perfectly, exactly as designed. Here's what I need you to understand, and I need you to really hear this part, because it's the part that gets left out of every conversation about financial responsibility. Linda wasn't unlucky. She wasn't irresponsible. She wasn't naive. She was the product. The payday loan industry didn't accidentally trap people like Linda. It engineered for them. These companies ran internal data analysis, real studies, with real numbers, from their own customer records. And what the data showed was stark. The customer who paid off their loan in 30 days was worth almost nothing. One $45 fee. Fine, but the customer who rolled over, month after month, never defaulting, always paying, that customer was worth hundreds, sometimes thousands of dollars. They called these customers churners, and they didn't leave churners to chance. They placed storefronts in working-class neighborhoods, near bus stops, near laundromats, near grocery stores, because that's where people like Linda moved through their days. The location wasn't random. It was a targeting decision. They designed the interior to feel warm and non-judgmental, because shame is a barrier to entry. A customer who feels embarrassed might leave. So the plastic chairs and the friendly name tags, and the Denise who asks how you're doing, all of it was friction removal, making the entrance feel safe. They trained staff to never voluntarily mention the APR, the annual percentage rate, because here's what that number looks like when you calculate it honestly. A $45 fee on a $300 30-day loan is an APR of approximately Hughes 391%. 391%. A credit card at 25% was considered expensive in 2004. This was 15 times worse. But staff never said 391. They said 45. Because 45 sounds like nothing. 45 sounds like a late fee. 45 sounds manageable. And the rollover was the whole game. Getting a customer to roll over once was the goal, because data showed that a customer who rolled over once was statistically likely to become a churner. The rollover wasn't a customer service accommodation, it was the revenue engine, dressed up as a favor. Linda didn't fall into a trap she didn't see coming. She was walked, step by careful step, by a system that had studied people exactly like her, and optimized specifically for her situation, her psychology, and her breaking point. That's not misfortune, that's engineering. Now, here's where I need you to lean in, because this is the part that makes Linda's story not history. It makes it this morning. By the mid-2010s, regulators had started to act. States imposed APR caps. Some banned payday loans outright. The Consumer Financial Protection Bureau made these products a priority. Those bright yellow signs started disappearing from storefronts across America. And a lot of people exhaled and said, good, that chapter is closed. But the people who built that model didn't close. They relocated. Into your phone. Same logic, same psychology, same revenue engine, new interface. Buy now, pay later. Cust. You're checking out. Doesn't matter if it's furniture, a flight, a medical bill, new tires. Right there at the bottom of the screen, next to the total. Pay in full, no interest, easy and flexible. And your brain does something automatic. It shrinks the number. $240 feels heavy. $60 4 times feels like nothing. They are mathematically identical. Your brain knows this. But the one on the right doesn't feel like debt. It feels like a feature. For a single purchase, maybe it genuinely is fine. The problem isn't the tool in isolation. The problem is the pattern. The same pattern that turned Linda's $300 into a 14-month ordeal. Because here's what happens at scale. You open a BNPL for the couch, another for the laptop, another for the flight you needed for a family emergency, another for the car repair you couldn't avoid. Each one feels managed. Each one is under $80 a month. But stacked together, you have quietly committed $400 of every paycheck to payments on things you've already consumed. And you did it without a single conversation about what it actually costs. Without a single Denise who had to look you in the eye. Cash advance apps call their fees, tips, add subscriptions because if they called them interest and published the APR honestly, you would see numbers that look exactly like 2004. Some of them exceed 300%. Cost, store credit cards, bury 29.99% APR in paragraph 11 of a welcome email. They give you a $500 limit and a free gift card for signing up. They market hardest to people in their early 20s, because early 20s means decades of compounding interest ahead, and young customers are statistically least likely to read the terms. The design is cleaner, the logo is friendlier, the storefront is gone. The math is identical. Linda paid off her loan in month 14. Total paid, $945. Of that, $300 was the money she'd borrowed. $645 was fees, pure, structureless fees that bought her nothing, built her nothing, and moved her nowhere. $645 in 2004. That was more than 3 months of groceries for her kids, half a month's rent, every Applebee's dinner she didn't take her daughter to for over a year, and then some. She never missed a single payment. When a journalist interviewed her years later, one line from that conversation became the most important thing I've ever read about debt psychology. I kept thinking I was almost done. Every month I thought, next month I'll be free. I just need one more good month. And then the month would come and it still wouldn't be over. But I still believed it. I believed it every single time. Read that again slowly. That feeling, the almost done feeling, the as next month feeling, wasn't hope. It was architecture. Keeping the principal fixed at $300 while collecting fees created the psychological sensation of movement without the reality of progress, like running on a treadmill that was designed to look like a road. She ran for 14 months. She thought she was almost free every single one of them. I want to end with something more important than any budgeting tip I could give you. Systems are not neutral. Every financial product you interact with was built by someone, and every choice in its design, the color of the button, the size of the font, the word stash tip instead of fee fuss, the word star flexible stars instead of debt. Every single choice serves someone's interest. In a well-designed predatory system, those choices are made to serve the company by exploiting the gap between what you understand and what is actually happening. That's not conspiracy, that's documented. That's in the internal memos that came out in court cases. That's in the congressional testimony. That's in the academic research on choice architecture and financial product design. Knowing this doesn't make you immune, but it changes how you see things. The next, Linda, is not a cafeteria worker walking past a yellow sign in Birmingham. She's 23 years old. She's on her phone at 11 p.m. after a long shift. Maybe retail, maybe healthcare, maybe gig work, where the pay comes in uneven and the months don't always line up. She's careful with money. She has a budget. She's not reckless. She's at a checkout screen. There's a button at the bottom. Pay in full. You've got this. Snuff. And nothing about that moment feels like the beginning of something. It feels like a solution. It feels like relief. She clicks it. And somewhere, in a server farm she'll never see, an algorithm logs a new customer and begins calculating her lifetime value. The storefront is gone. The machine is not. So before you close this video, think of one person. Not someone irresponsible, not someone reckless, someone careful. Someone who works hard and tracks their spending and still sometimes finds the month has more cost than money. Someone exactly like Linda. Someone exactly like the 23-year-old at the checkout screen. Send this to them. No lecture attached. No explanation needed. Just send it. Because Linda spent 2 years paying for something she never fully understood. And then she spent years more not talking about it because she was ashamed of something that was never her fault. She eventually did talk, and when she did, her story helped change laws. You don't have to change laws. You just have to send a video. The most powerful financial protection in the world isn't a spreadsheet or a savings account or a high credit score. It's someone who cares about you saying, "Hey, watch this. I just want you to know what the trap looks like before you're inside it." Linda didn't have that person. Now you do. And so does everyone you're about to send this to. If this hit different, subscribe, share it. Because the next video might be the one that changes how someone you love sees money forever. And that's not a small thing. That's everything.